Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. SGX Nifty was indicating negative opening, but here we opened significantly higher. And today morning I said, as and when FIIs are net sellers, it's better to sell on rise. As and when FIIs are buyers, it's buy on dip. So today the buy on dip did not work. The sell and rise worked. The morning when markets went up, so I also shorted, but when it fell 40 points, I just squared off my short. And I held on to that, I would have made big money. The reason, first thing is that, Nifty has been falling about 80 to 100 points for the past many days. But after falling 100 points, market used to recover. And today also, it's exactly the same thing happened. Market in the morning reached a point, from there started reversing, fell about 100 points, then recovered. And what happened? The second wave of selling in the afternoon, which nobody expected. Why nobody expected? Because European markets opened in green. US futures were in green. So the whole markets, the entire world markets painted with green. But we fell and the fall was so severe. It was a sudden fall and there was a big fall. Nifty fell more than 100 points and Bank Nifty, I think, more than 300 points. Why? As per some media report, the government is planning to increase the capital gain tax for stock market. Earlier, so there was a capital gain tax, so they removed it. So in place of that, they brought STT. Later, and STT also continues, they brought in the long-term capital gain tax also. But long-term capital gain tax is taxed at 10% beyond 1 lakh of profit. But now, as per a report, that the government is planning to increase that 10% to 30%. Not exactly 30%, it is as per your income tax slab. So for HNI clients, their income tax slab is about 42%. Whatever profit they are making, so they will end up paying about 42% tax. You may remember just few weeks before, the capital gain tax was removed for debt mutual funds. It was a 20% long-term capital gain tax after the indexation benefit. So that indexation benefit was taken away, 20% taken away. So the entire profit that you are making from debt mutual funds, so it will be considered as your income, you will be taxed accordingly. So that is what exactly they are planning even for the stock market. Definitely, if this is true, of course it is not confirmed, but if this is true, this is going to be a very, very big negative for stock market. In fact, in the last 15-20 years, when something happens globally, we will correct. Like Lehman Brothers collapse, we corrected. Coronavirus, we corrected. But without global cues, we corrected against the global trend. So that has happened in the past only when there was a friction between the government and FIIs. You may remember, I think in 2018 or 19 also, the government said, so FPIs will be taxed. So they sold continuously. Later they took that back. Of course, here what is being proposed is not specifically for FIIs. It is for everybody. But again, so when the rule comes for everyone, so FPIs will also be affected. Who knows? FPIs may be exempted. So right now there is no clarity. Again, the media report says that this will happen only if BJP comes back to power in 2024. So therefore, this long-term capital gain tax increase is not going to happen now. It's going to be 1 year away. But anyway, the markets will react. I do not know. Today also, FIIs have sold for more than 810 crores, while the domestic institutions have bought for 402 crore. So I do not know whether FIIs will be taking this negatively and they will continue to sell. So anyway, so it is definitely time to be cautious, and things are not going well with our markets. Number one, the STT was increased by 25%, and then debt mutual fund taxation was increased. So one by one, these things are not stock market friendly, I can say. Again, so who bothers about the stock market? Because there are too many people coming here and making the stock market as a gambling. So the government actually want them to get out. So by doing this way, so one way they can make them to go out. Anyway, I'm not an investor, I'm just only a trader. So I don't have to worry much about this long-term capital gain tax. So even trading also, so I'm planning to shift major part of my trading to US markets. There is a news, and it's not a confirmed news, but that's a really very bad news. But let me tell you, actually many people have been expecting this. It's not a surprise news actually. So many people were actually expecting this. As per like one of my friends told me, the government may be moving to a system where everything will be taxed. So there is no indexation benefit, this and that. So everything will be taxed. And even, exemptions may not be given. So, whatever your salary, whatever your income, you will have to pay the tax for the entire money. So this ATC, so they already have a new system where there is no exemption, but there is a higher taxation limit. Anyway, so let us not spend more time on that. And today, the large cap stocks, Reliance, HDFC, ICICI Bank, they came under severe selling pressure. So that's maybe because some FIIs are selling. So FIIs will be holding this kind of shares only. So if they are not happy, so they will be selling these kind of shares only. However, the broader market, mid cap, small cap, all ended up in green, while severe selling happened only in index heavyweight stocks. So despite positive global cues, we have fallen, and the kind of news we have, so definitely time to be cautious. In fact, it is time to be cautious for next 1 year. So next month, Karnataka state election, and then in another 6 months time, in the month of November, 5 state elections, then another 6 months, parliament election. So this one whole year is going to be, politics will be affecting the stock market. Looking at 2 days of straight fall, and people have become bearish, so people started selling call options in huge quantities. There was an unwinding in 17,800 PE, 17,700 PE, then selling in 17,700 call, 17,750 call, 17,800 call, and so on. Things are turning slightly bearish, but who knows? US futures are very good now, so the global cues may turn the things around. So anyway, 2021 Nifty was trading around 18,000 plus, and now it is still trading 18,000 minus. So for the last 1.5 years, Nifty has not given any positive return, and in my opinion, is not likely to give any return better than the FD return even for the next 1 year. So I mean to say that the Nifty may not give like 10-15% return. So it may go up, may come down, may go up, come down. It's not going to go anywhere. Last year September, I did 18,000 short straddle for this year December expiry, and just sitting and enjoying the profit. But I just did only 1 or 2 lots, not a big money. So 18,000 short straddle, people were selling, and they are very, very happy now. Are selling 16,000 put and 20,000 call. So markets will be volatile, will go 2,000 point up, 2,000 point down, but over a longer period of time, we may not perform. So remember, for the last 40 years, the Japanese market has not performed. Last 15 years, China market has not performed, but India has not been performing for the last 1.5 years. So I think for the next 1 year also, it will be something like that only. Anyway, these things we will discuss in a separate video. Right now, it is time to enjoy the evening. Hope you enjoyed watching this video. Thank you for watching.